Well, for the seventh time this year, Canada's central bank hiked its benchmark interest rate. The Bank of Canada brought it up to 4.25%, but it signals raises may pause in the new year. Jason Guidola reports.
Canadians face the highest interest rate since 2008, and some who are in and out of the bank today say they've been tightening their wallets for some time.
You know, now it's like you're not even budgeting. Like you only can buy this and you can buy that, and there's so many things that you can't buy.
We're going to be limiting our Christmas to getting together and enjoying each other's company and modest gifts.
Because I have wanted to go back to school. It's a little less of a possibility because I'm really scared to get into debt because I know just how bad it is, and if I get into it even more.
The seventh time this year, Canada's central bank raised its benchmark rate, which now sits at 4.25%. It says there's growing evidence the multiple hikes are working, slowing demand in the economy, facing overwhelming inflationary pressure. The Bank of Canada says since its interest rate decision back in October, economic data supports its forecast that growth will stall through the end of the year and into the first half of 2023. The Bank of Canada is signaling raises in interest rates may halt moving forward, something McMaster's DeGroote School of Business Sherman Chung is skeptical about.
The inflation is slowing, but really slowly. So I would not be surprised to see some smaller ones, but not big ones like this year.
Chung and the Bank of Canada say the Canadian economy is showing resilience, which is keeping short-term inflation high. Rates have impacted the housing market, but earlier this week, Equifax Canada reported non-mortgage and credit card debt have climbed.
I think the most important factor is the job market has been firm. People are still finding jobs. As long as they have jobs, they will spend.
It has to do with the war in Ukraine. It has to do with the climate crisis. It has to do with the lingering effects of the pandemic.
Senior economist with the Canadian Centre of Alternative Policy, Sheila Block, says Canadians can expect some more pain in the short term.
You know, if nothing else unexpected happens, I would expect that, we could see a recovery into late next year.
One banking official says that if there is a pause in hikes, they expect that the rate will remain at 4.25% until 2024. The Bank of Canada will announce another interest rate decision in late January.